It appears that I have a remarkable knack for anticipating the twists and turns of Tesla's stock movement. I'm not kidding. Every single video on Tesla that I have made was quite accurate, but the important thing is that you can do this too. My goal in this video is to share with you how I have been able to do this so that you can take the knowledge and apply it for yourself. Let's begin our journey so that you can see success by gaining valuable knowledge ready for practical application. The most effective approach that I've come up with to do this is for me to dissect each significant Tesla trade I've undertaken throughout the years, all while imparting valuable insights into the powerful strategies and concepts that I've leveraged. The weekly chart that you see here dates all the way back to May 2021 and is where I took my first documented Tesla trade. It is also the one that had the least amount of thought into it at the time, so I believe it is actually my worst trade in this video. You must learn what I did wrong so you can avoid making the same mistake. When I was analyzing this chart years ago, I noticed that it bounced up from here, and that bounce points can act as a potential support area. So I noticed that the price was getting pretty close to it and was excited to catch the bounce off the support. Now, when we skip forward and also take a look at the daily time frame, you can see that is exactly what happened. This candle was the entry, the stop loss was below the candle, and the risk to reward ratio was 1:2. It actually worked out very well. You might be curious about why I regarded this trade as a poor decision. First of all, this may sound counterintuitive, but a winning trade is not necessarily a good trade. You can do the wrong things and still win, but you will always fail in the long run due to the lack of due diligence. Now, what I did wrong specifically was that I used an overly simple strategy. A simple bounce from support for a swing trade is not a sustainable strategy. It would be fantastic if it was, because then trading would be easy, but it is simply not the case. I was completely aware of this, and I still took the trade that day, even though my conviction on it was not there. In order for a trade to be of high quality, you need to have a plan that is well thought out, and you need to be happy with the analysis you did, whether you win or not. Another reason why you should avoid taking low-quality trades is because they can reinforce bad habits. The second trade is much better when it comes to the analysis, so I was much happier with this one. You might be able to take away a few ideas from it and apply them to your own approach. This happened a few weeks after the first trade, so you might recognize the chart. However, we will now identify this peak as a potentially important level. Let's fast forward in time to where I spotted the next trading opportunity. The level we identified can potentially act as a support here. This time, we won't just buy a simple bounce off the support. We need to analyze what the price is actually doing and catch other clues to increase our chances of success. To do that, I will scale into the 4-hour time frame. Let me explain the analysis behind this trade. First, notice how the price has bounced off the support. Second, we have a pattern here known as the descending triangle, which is bullish. Additionally, there's a bullish divergence on the RSI, implying that the momentum of the recent downward moves has been weakening. Considering all of these factors, this was the entry point, and the stop loss was placed slightly below the opening of the candle. This trade worked out, and we actually identified more factors that were in our favor instead of relying on just one thing. Understanding the reality of trading is essential. Even the most meticulous analysis cannot guarantee a 100% win rate. No strategy, regardless of how well crafted, can completely eliminate losses. However, what sets apart a successful trader is their ability to consistently make well-informed decisions that tilt the odds in their favor. And that's precisely where the significance of high-quality trades comes into play. The true key to long-term success lies in this principle: consistently taking high-quality trades and allowing your edge to unfold. Patience and discipline become your allies as you resist the urge to chase quick gains and instead focus on the bigger picture. It's like planting seeds that, with time, grow into a thriving garden of profitability. A crucial point is that while low-quality trades reinforce bad habits, high-quality trades reinforce healthy trading habits. So think about the big picture and understand how each action you take can impact your mentality. So, as you navigate the intricate world of trading, remember that it's not about avoiding losses entirely. It's about fostering a mindset that thrives on quality, consistency, and continuous improvement. Each high-quality trade is a step forward, contributing to the evolution of your trading journey. Embrace these trades as opportunities for growth, and you'll find that success becomes a journey of continuous learning, adaptability, and ultimately, achievement. Let's now examine the third trade. Once again, you'll notice it's on the same weekly chart. Remember, peaks and rebounds can function as significant areas in the future. I've identified yet another crucial area from this peak. Sooner or later, I contemplated that the price would descend to touch that level. I made a mental note to closely observe its reaction when it does. As you can see, it did reach that line and produced a rather lengthy wick. At the very least, this indicates the presence of buying pressure at that level, confirming an impending trade opportunity. Moving forward and transitioning to the daily time frame, the initial point of interest is a sizable green candle that commenced below the support line and concluded significantly above it. Additionally, take note of the volume spike in this area. The conspicuous increase in volume is noteworthy, implying a high number of transactions contributing to the formation of the green candle on that particular day. While this in itself might suffice as a prospective entry point, adopting a stricter approach entails considering more critical elements for us to actually take an entry. An intriguing observation is that the price failed to close above the 25 exponential moving average for approximately a month, with a clear rejection occurring at this juncture. Derived solely from the price action, we can delineate a trend line that the price has been repelled by on 5 occasions. The objective of identifying these patterns is to comprehend the precise points at which the price's momentum is shifting in the opposite direction. Therefore, until there's a definitive breach of both the moving average and the trend line, a genuine buying opportunity remains inaccessible from our more rigorous perspective. This rationale guided me to the present entry point, which ultimately proved to be an excellent candle for entry. So that was another solid trade. The analysis and risk management were top-notch. Now, I would like to make a point that I think is important. Your job as a trader is to piece together the story that the charts are telling you by picking up all of the little clues. If you focus on the actual process and beauty of all of this, I promise that you will start to perform a lot better as a trader. You just have to relax and understand that there are a lot of things out of your control, and all you can do is allow yourself to flow in the right direction. Time to break down the fourth trade. So, with the last trade, we successfully bounced off this support. This is what the result of that looks like on the weekly time frame. We will now remove the lines because another opportunity is upcoming. When I looked at this, I decided to draw a trend line through the peaks on the weekly time frame and concluded that the price would eventually reach and react to that trend line. My plan was to look for shorting opportunities because that trend line is descending. This indicates that, contrary to popular belief, Tesla's stock price is gradually declining over time as it fails to make higher highs. Now, let's skip forward to the trade and switch to the 30-minute time frame. As you can see here, the price did indeed reach that purple trend line and was promptly rejected from it. Although this candle could have been a valid entry point, my actual entry was somewhere else. I had a line drawn on this time frame to better understand the current structure and decided to go short once we achieved a close below it. While I always attempt to wait for the time frames to align, it's not always perfect. Let me illustrate the progression of this. We did eventually close below the trend line with this candle, and the stop loss was set above the opening of that candle. It worked out, but the issue was the gap between this candle and the previous one. Gaps often act like magnets that prices attempt to return to. In hindsight, this entry wasn't of high quality. It's important to note that this could have been a losing trade due to the poor entry. The lesson here is that whether a trade is a win or a loss, it's crucial to reflect on it and identify ways to improve. Continuously refining your process is vital, which is why maintaining a journal and documenting all trades is a fantastic practice. Companies pay for data to analyze and enhance their approach to reach consumers. Similarly, you generate your own data that you can analyze to refine your process. Instead of just moving on after a trade concludes, closely examine how you can improve. Over time, your performance will naturally improve, which is the ultimate goal. Alright, let's delve into the most recent trade that I not only discussed in my earlier videos, but also accurately predicted before its actual occurrence. Looking at the weekly time frame, it's remarkable how we precisely rebounded off the purple trend line, which followed the result of our previous trade. Interestingly, this move resulted in a lower low. Over the past 3 years, Tesla has maintained a descending trajectory, and as of now, it has yet to break free from this established pattern. Now, let's expedite our analysis to focus on the subsequent trading opportunity that I identified and capitalized on. Once again, Tesla's price action found itself near that trend line, and at this moment I was anticipating for the price to get rejected from that line. Transitioning to the daily time frame, I identified a bearish pattern known as the ascending triangle. A small caveat, I inadvertently neglected to mention an RSI divergence, an additional crucial point that escaped inclusion in the video. However, it's important to recognize that multiple bearish factors were gradually converging, a topic I had been discussing for weeks in advance. A leap ahead reveals a substantial red candle that conspicuously closed beneath the triangle pattern, heralding a subsequent bearish movement. I successfully identified and exploited numerous shorting opportunities during this phase. To corroborate my claims, you can refer to my earlier Tesla videos, where I thoroughly covered these developments, reaffirming the authenticity of my insights for anyone that is curious. Allow me to elaborate on this matter. It's essential to underscore the efficacy of technical analysis in the realm of trading and investing. As evidenced by my consistent utilization of this approach, it becomes evident that technical analysis is not merely a theoretical concept, but a practical tool with tangible outcomes. Tesla is a company that undoubtedly stands out due to its remarkable innovations and promising trajectory. While it's undeniable that Tesla possesses a bright future, it's noteworthy that my trading strategy isn't hinged solely on reacting to breaking news or the latest headlines. Instead, I have consistently relied upon the intricate patterns and trends that unfold on the charts. In this context, the value of technical analysis truly shines. By diligently studying price movements, chart patterns, and various technical indicators, I've been able to anticipate and navigate many of the significant shifts that Tesla has undergone. This proactive approach empowers me to make informed decisions based on historical price data and market behavior, rather than being solely influenced by the fleeting narratives of the news cycle. If you guys enjoyed this video, hit that like button, comment, and subscribe to show me that you want more content like this. My goal is to provide value to you all, and your feedback would help me immensely in achieving that goal. Thank you for watching, and I will see you in the next video.